Good day, money masters and treasure hunters. Welcome to the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he's away on vacation. Today is July 3rd, folks, and it is a shortened market out there. The markets close at 1. We're actually taping this show here during my morning show that I do at TFNN each and every day. I kick things off for TFNN at 9 o'clock, doing a show called the Trader's Edge, and you can always catch the archives of those shows on Channel 9. So it's a great show to be able to tune into to get an idea of exactly where the markets are headed, because a lot of times you take a look at maybe, Bloomberg, CNBC, one of Fox Business News, and they tell you where the markets are at. We're certainly going to tell you where the markets are going, why, what patterns are out there. And then, each day, folks, if you're not familiar with me, Tom and I do a show also at 10 o'clock called The Money Master Show. That show is archived on Channel 10 as well. And, folks, I absolutely treasure your presence here with me, and my outcome is to help you to become a better money master. Now, if you're listening to us on the radio, thank you so much for doing that. You can catch the archive of this show at the homepage of TFNN.com, and you'll be able to take a look at my chart, see what it is that we have, pattern-wise that are setting up. We're going to talk about AB equals CD. I absolutely am going to be able to teach you something, but mostly, folks, I'll inspire you. And, folks, I want to be able to provide you with tools that help to lead an inspired life, because leading an inspired life, folks, to me, that is what it's all about. So let's go take a look at one of our tools. I call this the tool of lifestyle. With it being July 4th, it's not a July 4th weekend, but certainly a July 4th holiday out there. Lifestyle, folks, is the art of discovering ways to live uniquely. Now, what I mean by this is, let others lead small lives, but not you. Let others argue over small things, but not you. Let others cry over small little hurts, but not you. Let others leave their future in someone else's hands. But, folks, that is not you. That's why you tune in here to TFNN.com, because lifestyle, folks, it's not an amount. It's a practice. And I want you to be able to practice the patterns that are out there, whether it's volume patterns, swing point patterns, AB equals CD, the Chapman wave, you name it. And what I really want you to be able to do, folks, when it comes to lifestyle, I want you to earn as much money as you possibly can and as quickly as you can. Share that with your family and friends, and especially your kids this weekend, not this weekend, but today and tomorrow, over the, as the families get together to celebrate the fireworks and July 4th. Why, folks? Because the sooner you get money out of the way, the sooner you'll be able to get rid of the rest of your problems in style, whatever style it is that you want to live. Now, if you're listening on the morning shows, you can always give us a call at 877-927-5568. Would love to hear from you. And if we take a look at the style in yesterday's markets, the style was pretty much flat. If we take a look at the futures market here, right now you've got the Dow futures up maybe about 10 points or so. You've got the small caps up about, the small caps really been leading the charge on the way up. Also doing that this morning inside the futures market. They're up about 0.2%. Relatively flat, though, up 2 points. You got NASDAQ futures up about 6. That's also up about 0.2%. King dollar up 8 ticks right now, trading out at 82.09. You have gold. Gold's up big right now. Gold's up $18.70. Let's go take a look at gold, see exactly what gold is doing out there. Now, if you've been watching my shows, I've been filling in for Tom here on, if not one or both of the hours. And one of the things that I showed you in the gold contract, that's what we're looking at here right now. You have gold trading out at 16.16. Now, one of the things that you want to take a look at in this chart pattern that I've got here on my screen, really three different things that we can take a look at that are important for you to be able to note if you are trading gold, whether you're long or short. So the first thing is that you want to do, folks, you want to take a look at the swing point that has huge volume. That's a swing point low that goes out to September 26th. Now, the high of that candle is 1666.30. The low of that candle is 1535 even. Now, the volume on that was 359,000 shares. What you will see is right now gold is trading inside that one candle. You won't see a real breakout of gold until it gets up and above that area. Otherwise, right now, all it's really doing is just simply moving sideways. But it's moving sideways in a consolidated range with inside a couple of patterns that you absolutely can trade. Now, one of those patterns, if you're taking a look at this downtrend channel goes all the way back. Now, on a downtrend channel, folks, or an uptrend channel, whichever kind of channel it is that you want to draw, when you're drawing those channel lines, you want to make sure you're using co-located opens and closes. So in this case here, I'm actually using the open on the gold contract on February 29th. That high is the open was 1786.20. The next actual touch point for the channel line is going to be the open on May 1st, out at 1666.10. Then the next touch point is actually going to be the open on June 8th when it was trading out at 1590. You want to make sure that you have at least 3 co-located opens and closes. There's more than 3 here. Now, the reason, and then the bottom side, go to TigerTV, watch this show either live or catch the archive of this show and draw in the bottom part of your channel line as well. What I want to do here is really focus on the top portion. Why? Because a couple of things. Number one, gold, this blue and red line that I've got on my system here is the 50-day and 200-day exponential moving average. On a daily chart, folks, or weekly chart, monthly chart, whatever you're using, when you have the 50-day cross through the 200-day, it's what we call the death cross. That is a signal that you are in a long-term bearish mode now. And that's what gold is in at this moment. Gold is just really continuing to chip away at the bottom of the 1535 price. It's tested it 4 times. I expect it will test it again. It's eventually going to go ahead and bust away like a little jackhammer out there. Why? Because of the U.S. dollar, because gold is measured in dollars. King dollar is on its way up. But let's not get into that just yet. Let's just take a look at gold. Let's stay on gold. So number one, you've got this downtrend channel. Now, the downtrend channel, what you want to be able to also take a look at is gold did break out of it. So longer term, that's what the 50-day and the 200-day are telling you. Longer term, gold is in a absolute bear market right now. Till that 50-day crosses back up above it, it's in a bear market. You can use that. In fact, if you go to the homepage of TFNN.com, I have a special report out there. Takes a look at multiple indexes, In fact, I did a special for our July 4th show for tomorrow. So tune in tomorrow. Tomorrow's shows, the 5 to 6 show, is actually all about the long-term money management tool. So go to the homepage of TFNN.com. Go ahead and get the special report. That way you'll be able to follow along with the special report. I show you exactly how to do it. I give you the exact formulas, the step-by-step process, what it is that you can look for so that you know whether to be in or out, whether a mutual fund that you're in or a stock that you're in or an index that you're in, whatever it is that you're trading, a commodity, doesn't matter. Whatever you're trading, you can understand whether long-term you should be in or out, or whether you are in a bear market or a bull market inside that equity, whatever it might be. In this case here, when we take a look at gold, you can see this downtrend channel that it also has been traveling in. Now, each time after it broke out, and it broke out on June the 1st, folks, each time that it's broken out, as it's trying to get up in higher price, what is stopping it is the 200-day exponential moving average. It's why on your charts, I want you to, there's a reason why I have, in essence, 3 different patterns that I'm showing here, because those 3 different patterns are working in sync with each other, so that when, in this case here, when gold tests the bottom of the top of the downtrend channel and it rejects that area, then you can project exactly where gold is going to go to. Now I use that word exact. We're going to use as a range here. So in this case here, you had gold that was punching down into that downtrend channel, trying to get back in, and it was doing that on June 28th. Actually got stopped dead in its tracks here. Now, if you went back to the markets and you took a look, the markets were moving down. They were moving down pretty big. How is it that this downtrend channel, that the top of this downtrend channel held it in as a support area? Does it really matter? All you want to really know is that it did work, and it works. It's been working on a continuous basis here. Then what happens in the next trading session? You have gold just simply move off of the low of 1551, getting up to a high of 1607. Pretty decent move, 60-point move, $63 move in one trading session. Now, what that also told you, once you rejected that area, if you knew where the 50-day was, which you see on my charts here, folks, you said that's going to be your first target. What's your next target? It's going to be that 200-day gold heading to 1631. Trading out right now at 16.40, folks. 877-927-6648. Would love to hear from you, especially if you're listening to the morning show. If you're listening to the afternoon shows, drive safe and absolutely be enjoying your holiday, your July 4th holiday. We'll be right back, folks.
you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV yet, then visit TFNN.com today to see what you're missing. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom while he's away, and hopefully you're having a great 3rd of July. This show is being taped on the morning show that I kick off for TFNN every morning at 9 o'clock out there. But stay tuned because I'm absolutely going to teach you something. We were talking about gold before we went into break, so let's go ahead and finish that off. Gold trading up right now, up $20. That's up 1 2/10% out at 16.17. Its next target here is 16.31 and change, where it's going to run in the 200-day exponential moving average. That has held gold in check here. It held it as it got tested back on June 6th. It was tested again on June 15th. tested again on June 19th. Expect to see a test of that area today. Now, if gold can trade up above that, and if it does trade up above it, what you're going to want to be paying attention to is the top of that swing point from September 26th. That's the swing point that gold has basically been trading in a sideways range most of the time since September in 2011. Now, the top of that is 1666.30. You get above that, and then it says that the dollar is going to get weaker and gold is going to have some energy in it. And if we take a look at silver, right now silver this morning trading up 56 cents. So you got silver up 2% in the pre-market. You've got light sweet crude up 3 and 0.7%, up $3 right now. If we take a look at silver, we're also looking at that downtrend channel. Now, silver has been in a long-term bearish mode ever since the middle of November 2011. That's when the 50-day crossed through the 200-day. You were looking at a price point back then in the 34s. You got gold or silver trading out right now at $28. Now, silver also being in that downtrend channel, and today breaking out of it. Also breaking out above its most recent swing point that you're looking at going back to December 29th, 2011. The high on that, $27.84. Now, that swing point had 32,000 contracts. What you have done today is 15,000 contracts. And if you also take a look at the where silver would likely trade to, you go back and use that same swing point example as we did in gold. You would use September 26th, the high out there being $30.97. Where I suspect silver, you'll still see silver trade to, and it could certainly do it today, is going to be the $28.72 range. Another 72 cents, and that's going to be the 50-day exponential moving average. That is on silver. So let's go take a look at light sweet crude. Light sweet crude right now trading out at $86.79. Where is light sweet crude headed to? I'm glad you asked me. $90.16. Of course, you can say, Steve, how can you possibly say that? Well, pretty simple, folks. What you want to do is you want to make sure that one of the tools that you use inside, if you do use a charting service, if you are now learning how to use charting, maybe you've used it for a while, you want to be able to use Fibonacci retracement and expansion. The numbers that you want to use on a retracement level, 0.382, that's often what's referred to as a dead cat bounce. So you've probably heard that. You also want to use 0.618 and 0.786. Now, when I talk about using the price point of $90.16, that happens to be the 0.382 retracement off of the highs to the lows. The high that I'm talking about in light sweet crude goes back to March the 1st, 2012. The high out there, $110.55. So crude went from $110.55 all the way down to the low, in essence, that was established a couple trading sessions ago, got down to $77.28. As it was doing that, it was making a 1 to 2.618 A to B equals CD pattern. What it was also doing, it was testing the swing point that goes all the way back to October 4th. Now, October 4th is a very key date, a very key swing point. In fact, you want to understand any stocks that you have in your portfolio. Where are they trading in reference to October 4th? Because eventually our markets are going to head down into that area. And if your stocks are already down there, that's telling you that you are dealing with an equity that has substantial weakness in it. And where's your equity going to go as our markets eventually move back down? They're not going to do it now, not going to do it today. If the markets are going to trade up, the markets are going to complete a pattern on the way up. They're going to complete an A to B equals CD pattern that's out there before they set off their next, what we call a Gartley sell pattern. But on the retracement tool, just simply going from that high to the low, the $110 area, down to the $77 area, the 0.382 and its next stop, and the stop where you would expect to see people get off the elevator, meaning people take some profits. And folks, if you're running a business, you know the importance of collecting your receivables. Well, when you are trading the markets, this is also a business, and you want to make sure that you also are collecting your receivables. In fact, I have done a special show for July 4th. So it's going to be a tape show. It's not going to be this tape show, but from the 4 to 5 time frame, folks, I've done a system expectancy, a position sizing, a money management show. That show that we've taped from 4 to 5 tomorrow is probably the most important show when it comes to trading and investing that you could actually watch. Now, the archive, just in case you're cooking some burgers or steaks or lobster or whatever it is that you are grilling up, that show is going to be archived as well on Channel 5 underneath recommended viewing. But make sure you write that down. Make sure that you go watch that show. Maybe you have a little time in between, fireworks or what have you, and go watch that hour segment, as well as pick up on the 5 to 6 o'clock hour. That's where I deal with long-term money management strategies. So if you're interested in understanding how it is that you can better manage your long-term, your retirement funds, folks, then you absolutely want to make sure that you catch that show as well. And it's really all about happiness, folks. It's all about the art of learning to get joy from just simply your substance. And one thing, folks, happiness is not something you postpone. Do not postpone happiness. Folks, all you need to do is just simply design what it is that you want right now for the present. The President of Light Sweet Crude, it wants to get up to $90.16, trading out right now at $87.12. So fill up those cars with gas, folks, out there. If we take a look at, let's go take a look at the actual indexes out here. So what were the indexes doing? Yesterday, you had now first we'll take a look at the small caps. The Russell 2000 being the lead dog in the hunt right now. The Russell 2000 got up over its B point. The B point, the swing point that I'm referring to, is June 19th. Did it with conviction on Friday. Got up with wide price spread. That wide price spread was also stopping right. We know we were talking about downtrends, and so when you take a look at the Russell 2000, what actually stopped it in its tracks on Friday happened to be the downtrend. So if you're watching this on Tiger TV, you see that. What happened yesterday? Yesterday got up early, pulled back just a little bit, tested the top of that downtrend, and boom, took off and finished at the top of its trading session, closing out at 807.94. The small caps are on their way up into the 822 area. That is the 0.786 retracement. I suspect that what we actually will see here, with the small caps acting as strong as they are, small caps may get back and actually get back and touch the March 27th area. The low of that is 839.98. It is full moon Wednesday, and so I don't know, or full moon Tuesday, I should say. Don't know if you caught the full moon that came in late last night. Boy, this morning was absolutely beautiful as it was moving out over the Gulf of Mexico. And so, be able to catch that tomorrow and tonight. I guess with regard to fireworks, it's going to have a little bit of more than just fireworks. You're going to have a beautiful moon to be able to take a look at. So you got the Russell 2000 on its way up into at least the 817, 822 most likely, and then it will go ahead and try to attack the March 27th area. What you had yesterday in the markets, you did have the S&P 500 get up over its swing point. That swing point in the S&P 500 being the June 19th area. The S&P closing at 1365.51. S&P wants to head to 1406, folks. 877-927-6648. If you're listening to the morning shows, give me a call. We can take a look at your equity. We'll be right back.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom while he's away on vacation. And hopefully you are off to a great start of your day. It is terrific Tuesday. Maybe it's the end of your day. We are taping this show at the 9 o'clock show when I kick off everything for TFNN each day, doing the Trader's Edge show. So stay tuned. I'm absolutely going to teach you something. And, you know, it's really at TFNN, it's always about sharing. You know, we've got fantastic hosts here, each person sharing either a different trading pattern, maybe some different thoughts, and sharing, folks, makes you bigger than you are. So think about it like this: as you are gathering with family and friends, you know, to celebrate the 4th of July, that sharing is what makes you bigger than you are. The more folks that you pour out, you know what happens? The more life will be able to pour into you. And don't you want more out of life, folks? Let's go to Irene in San Diego. Irene, thanks for calling. Thanks for holding.
Hi, thank you.
How are you today?
I'm fine. How are you?
Excellent.
I love your motivational talks in the morning.
Oh, great. Well, that's great. Well, thank you. I always like to throw a few things in here and there.
Oh, sure. Why not?
Yeah.
I just sort of caught the tail end of some segment that you said to watch, or two segments. One
Yes.
was, I guess, trading, and the other one was money management. So what were those, and where do we find those?
Sure, no problem. So what we did, because July, the markets close at 1 o'clock today. That's why we're taping Tom's show, which is going to replay, today from 4 to 6.
Mm-hmm.
And also what I did was, so to have some special shows for July 4th, I put together two segments. One is the 4 to 5 segment is really all about teaching you the money management strategies. It's about teaching you how to actually put together the system expectancy of your trading system. This is something that you absolutely must do. If you're going to trade and invest in the markets, doesn't matter, oftentimes we talk about trading. I consider it investing as well. And if you want to understand, and you're doing this on your own or somebody else is doing it for you, you want to understand the expectancy of your trading system. And the reason is, Irene, I speak with a lot of people, and a lot of folks that are not in the market, they're not in the market because of one primary factor. They just don't trust. They don't trust themselves. They don't trust others. They lack certainty. And that's what that 4 to 5 hour tomorrow is all about. It's about being able to show you a tool that will be able to give you certainty when it comes to your trading and investing. So that's a very cool thing. Now, that's going to air from 4 to 5. If you can't catch that, it will be on Channel 5 on Tiger TV under recommended viewing. So you'll be able to catch that. Then from 5 to 6, I did a special report, and we've had thousands actually download that report. If you haven't had a chance to do that, Irene, please go over to the homepage of TFNN.com. You'll see special report over there. And just download that, and then you'll be able to follow along on the 5 to 6, because 70% of folks have IRAs, retirement funds of $100,000 or more, and most folks, they're working very, very hard for their money, not spending a lot of time trying to determine whether they should be in or out of the market. And so I provided a simple tool. You don't need to have understand swing points, A, B equals C, D patterns, any of that stuff. Just a simple tool that you can apply to any of the choices that somebody might have, some of the mutual funds, to determine whether you should be in it or out of it. And the cool thing is I went back and took a look at the last 73 years worth of data. So, I think I have enough examples, tests out there. And I started with $10,000 in 1928 using the Dow, and that $10,000 on the buy and hold strategies, which is what most money managers will tell you what to do, not to get out of the markets, just stay in there. $10,000 turned into $500,000 in a buy and hold. If you use my tool and just simply got out of the market when this tool told you to get out, that $10,000 turned into about $6 or $7 million. If you had the ability to actually go short the market, that $10,000 turned into $27 million in that time period. So it's absolutely a tool. And that's going to be from 5 to 6. That's also going to be archived on Channel 5 under recommended viewing. So, please catch those out there.
Okay, great. Thank you so much.
You bet. And thanks for calling, and thanks for listening. And you, Irene, you motivate me.
Thanks, Steve.
All righty. So, folks, Dow opened up just a few minutes ago, about 9 minutes ago. Dow is trading off 10 points. S&P is off a half a point. The composite down 30 cents right now. Again, the Russell 2000 just slightly green. New York Stock Exchange, though, up 12 points, up about a tenth of a percent out there. King dollar, though, up 6 pennies. Now, what you really want to pay attention to is the DAX over in Germany. So what I have up on my screen here is the DAX. This is what you're going to want to really pay attention to. Our markets here closed at 1 o'clock, or they're closing at 1 o'clock. The DAX is going to certainly be trading tomorrow over in Germany. They're not going to be celebrating the 4th of July. And when I began the show, we were taking a look at gold. We were taking a look at the different patterns with inside gold. One of those was a downtrend pattern. When we take a look at the DAX here, this is very, very important. We take a look at the DAX, you see an uptrend channel. Those are the two red lines. That little dotted line is just simply the midpoint. It's Midway Island. No, it's the midpoint inside the uptrend channel. And this uptrend channel here in the DAX goes back to September 13th, 2011. And remember, when you are creating channels, you want to make sure you're using co-located opens and closes. What you can see here is that the DAX yesterday closed up near its highs and got just inside. Just depends on which, where you are drawing your lines exactly. So this is not about being exact. This is about being pretty darn close. PDC, as we call it. Or as I just called it right now. And what you're taking a look at here is right now today you've got the DAX trading out at 65.44. That is up 48 points. That's up 0.7%. The DAX is now inside that uptrend channel. That's big, folks. Expect another test of it. Expect a pullback at some point in time to be able to confirm whether or not, it's truly going to be inside that uptrend channel. If it is, that says the DAX, even though there are problems all around the world, there's currency issues everywhere, what you need to do when it comes to trading and investing in the markets is you need to remove all that noise from your head. Because all that stuff, folks, what that is really about, that is about just simply being able to keep you glued to the television or sell you on fear. And fear, we all know what fear is, right? False evidence appearing real. That's all fear is. What you want to do is you want to get rid of that noise, get that out of your head. The world's not coming to an end, and you want to be able to trade the chart patterns. Well, understanding the DAX, believe it or not, even though we're here in the good old US of A and we're celebrating the 4th of July, it's actually this chart here, the DAX in Germany, that's probably going to give us the most important signal with regard to where it is that our markets are going to go. Now, at this stage, our markets, it's a full moon, folks. So it is full moon Tuesday, and the lunar patterns, you may not trade lunar patterns out there, but I certainly am aware of them. They absolutely do have an impact on the mood of human beings, and certainly, and as well as oceans and waters and everything else out there. And if you were to take a look at the last 3 lunar cycles, full moon, new moon, full moon, new moon examples, what you would expect today could possibly be a high. Now, you're going to know whether that is the case or not. That's always a possibility. But you want to watch the DAX. You're going to want to watch how the DAX trades tomorrow, for sure, because if it continues up in this uptrend channel, this tells you that we're going to see higher price. And we may see higher price than we think. Why? I don't know. I don't even need to know the reason why. I just need to know that that is what the patterns are that are out there. That's all that you need to know. As well. Now, what are the drivers behind it? Certainly one of those drivers is the U.S. dollar index, because there is a directional correlation between a strong dollar is a weaker market, a strong dollar is a weaker gold price. Well, right now you do have the dollar up at 82.06. That's up 5 pennies. And you have gold up $21. Sometimes they come a little bit disconnected here, but they will join each other. And it's a directional correlation. It is not that if the dollar index is up 2 ticks that the market is going to be down 20 points in the Dow or something like that. It is only a directional correlation that is out there. And when we take a look at the U.S. dollar index, I'm going to punch that up here on my screen. What the U.S. dollar index is doing, it's setting up its next patterns. If you're watching the screen here, you're going to see 2 beautiful patterns. One is a butterfly pattern. That is the one that completed as the dollar was moving up into the price point here. When it was getting up into the price point of $83 and change, where the U.S. dollar actually made its high was $83.67 on June the 1st. So it completed a butterfly pattern. That is the blue pattern that's out there. That is an expansion of swing points. That is a 1.272 expansion of swing points. I mentioned to you, you want to make sure that you have a retracement ruler when you're measuring when you're measuring moves inside the stock market. Well, those 3 retracement numbers are 0.382, 0.618, 0.786. When it comes to expansions, and folks, life is always about contracting and expanding. You want to keep those contractions down to a minimum, right? And if you keep those contractions down to a minimum, why? Because it allows you to expand quicker. Well, when you're taking a look at a stock chart and all it does is it contracts to the 0.382 and then it starts to move in the other direction, what's it going to do? The same thing you will. It's going to go ahead and it's going to have a larger move. Well, that larger move is going to be measured as an expansion. And in stock charting, it's going to be measured as an expansion of swing points. Well, if we take a look at the U.S. dollar index, and what you want to do is, folks, you want to understand, you take a look at, I use these Japanese candlesticks. And the reason that I use Japanese candlesticks versus bars is just simply because they give you so much more information. When you see a wide-ranging bar, that's exactly what we saw inside the U.S. dollar index on June 29th. That is this red bar that you see out there. Now, it stopped where it should have stopped because it was making a 100% movable move. That means coming back and testing the swing point from June 20th. That also means it was going against this wide-ranging green bar here. So it stopped where it should. But the U.S. dollar index wants to trade down to $80.36. That, folks, will put juice in the market to go ahead and complete those patterns in the S&P 500, the Dow, the small caps, everything else that's out there. 877-927-6648. Give us a call, folks. We'll be right back.
When Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and they're very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back to the Tom O'Brien Show. Folks, I'm your guest host, Steve Rhodes, filling in for Tom while he is away, and hopefully you're having a fantastic July 3rd out there, and be safe tomorrow. The markets will be closed tomorrow. They closed at 1 o'clock. If you're catching the Tom show, this is actually being taped at my 9 o'clock show. So for those of you not familiar with me, I do a 9 o'clock show each morning. Helps you to understand where the markets are going. Also just celebrating our 1-year anniversary of my newsletter service, which produced a 31% return, folks. And if you're not getting that type of return, or even if you are, you might want to check out my newsletter service. You can do that. 30 days unconditional money-back guarantee. Go to the homepage of tfnn.com to check that out, all the details there. Let's take a look at Ford Motor Corporation. Ford having a better-than-expected sales number. Up about 7% versus 4.4%. That was based on an estimate. Ford is trading out right now at $963. Now, Ford had a tough day on June 29th. Had 138 million shares come out of that. Actually traded a little bit lower yesterday. So let's go back and see what Ford is doing. Now, if you caught the early portion of the show, we were taking a look at October 4th. And I mentioned to you, October 4th is very important because our markets here in the U.S. are eventually going to trade back down there. Not until they have, a little bit more of a bounce here. And it could be a pretty healthy bounce. Now, October 4th is where they're going to be headed. That's they'll be headed to December, the December lows and November lows, but eventually October 4th. Take a look at Ford Motor Corporation. That is exactly what Ford is doing out there. Now, Ford certainly had one heck of a run. If I put this on a weekly chart out here, which I'll do, then what you'll see is Ford coming off of the lows of $1 back in the February 2009 timeframe. Now, let me give you a money management tip here on how to trade some of these equities, because it really is all about money management. That is, if you want to understand the one key to success in trading, it is absolutely has everything to do with money management. And what I mean by that, folks, is you never have to invest, you never have to risk, shouldn't say invest, you never have to risk more than 1% on any one trade that you do. What's really unfortunate is nobody teaches you the actual rules of the game here. The rules are not just about being able to pick the right stocks out there. Certainly that is helpful. But, in a bull market, folks, I guarantee you, when you have a bull market, you can take out a dart and you can throw it at the Wall Street Journal or Investors Business Daily, and you can keep picking stocks that way. In a bull market, most stocks are going to rise out there. But still, it is all about money management. It all means when the stock goes against you, you want to be able to protect your risk out there. So in the case of Ford Corporation, or maybe there's a stock that is trading, in the dollar range or less, and it's something that you want to go ahead and take an investment in. What you want to be able to do here, folks, is you should take whatever your trading capital is. Let's say it's 10 grand. And if you multiply that times 1%, you're talking about $100 risk. If a stock is trading at $1, you can buy 100 shares. That way, everything is at risk there. That's how you put something into a drawer. That is, that is the best way to be able to trade something, because when stocks trade below $5, folks, they have a pretty decent chance of going out of business. Now, Ford ran all the way from the lows of $1 and a few pennies or what have you in February of 2009, ran all the way up into the highs of January 2011 when it got up into the $18.97 area. Now, when it did that on the weekly chart, it did that with 343 million shares, and it closed out at 1865 the week of January 14th. It opens up at 1866 on January 21st. Now, if you take a look at Ford here, Ford, like all other stocks, and especially on a weekly chart and a monthly chart, they all have, they all will give you candle information, advanced leading information that the move is over. In the case of Ford, as it was making a high, it did that and created a bearish engulfing candle. It also did that as it was making a high coming into the week of April 30th, 2010. It also gave you a bearish engulfing candle the following trading session. And at the high out there, folks, you had Ford at $14.57. Ford traded all the way back into the $9.75 area. So they're always going to give you signals. The markets will do that. They'll give you candle pattern formations. Sometimes they're just a one-day candle pattern on a weekly chart, maybe just simply a one-bar candle configuration. In this case here, a bearish engulfing is a two-candle pattern. Why? Because in a bearish engulfing, it has to only occur as the market is moving up. The body of the second candle, in this case here, the week of January 21st, has to completely engulf the prior body. It did that and then some. And then you then had a confirmation with a close lower the following week of January 28th. And what Ford has done is it's made A to B equals CD down. So it told you that, Ford was ready to start moving lower. It doesn't tell you how far it's going to move lower. That's where you want to be able to use A to B equals CD patterns, because the market is always doing that. 60% of the time it's going to do a one-to-one A to B equals CD. What do I mean by that? When you take the measurement of A to B, and then you apply that to the C point, and C is nothing more than a retracement of A to B. So in the case of Ford here, it went from the highs, just to give you an idea, it went from the highs of 1897 down to the lows on March 18th, when it made the B point at 1375. What's it do? It does a retracement. What kind of retracement? Well, if we go take a look at it, we'll go from those highs to the lows. The type of retracement, 0.382. I believe when I began this segment, we talked about retracements, 0.382. If you do a 0.382 retracement, you're going to have energy to do more than a one-to-one measured move. What does Ford do? It does a 1 to 1.272 A to B equals CD down. The market is constantly giving you clues, folks. And I want to be able to teach you how to be able to use those tools in your arsenal so that you can learn how to trade these, so that you can understand where markets are going. So when you take a look at Ford, it rests up at that area, moves a little bit higher. Now what you have is you have Ford coming back into that October area. Now it's still trading inside that candle. On the weekly basis, it did 446 million shares on the way down. As you have entered it, you've not had anywhere near that volume. What you'd really love to be able to see on Ford is a test of $9.05. That is the October 7th low. I imagine when I pull this back on the daily chart here, what we're going to see is that is also the October 4th low. October 4th, folks, also was a bullish engulfing candle. So just like at the top on Ford, you had a bearish engulfing candle. Back here, as Ford was making some lows on October 4th, made a bullish engulfing candle. You got confirmation on the next session. Ford went from that low of $9.83 and made a run all the way up into the $13 and change area. So right now, you've got Ford trading inside that candle of October 4th. The high is 1013. The low is 905. 905 would be a nice place to pick that up. Now, when we take a look at Ford, I'm going to just simply draw a line across the bottom here real quickly, both on price and on volume. What you can see here on the daily charts is a few trading sessions ago, that was on Friday's session, you had volume coming down in there. Be patient on Ford. It ought to get down to $9.05, folks, and that may be a very good buy on Ford Motor Corporation. Folks, have a great July 4th. Stay tuned for the next hour, and take care. Bye-bye now.